Hello, everyone. Welcome to my channel. Well, the economy is worse, inflation is worse, but artificial intelligence saved the day. The first punch came when we heard the gross domestic product had come in at only 1.6%. It was estimated that it was supposed to come in at 2.4%. So that shows that the economy is slowing down, okay? But inflation was worse. The personal consumption expenditures for the quarter came in at 3.4%, which was the highest it's been in a year. So you have a slowing economy, but worse inflation on a quarterly basis. And then Meta, it reported good earnings, but they did not like to hear the guidance about the second quarter not coming in as high as they expected. Also, they do not like Zuckerberg spending excessive money on artificial intelligence and on the metaverse because they do not see that as productive with Meta. It's mainly an advertising platform with its different applications. And most of the money spent on artificial intelligence, they're not going to compete really with Google and with Microsoft, the big giants in this area. So it's seen as basically a waste of time. But Zuckerberg wants to keep his company on the cutting edge of things and will persist in doing it and lowering his cash, which he has plenty of. In fact, he's even going to pay a dividend now to shareholders to entice them to buy more shares. But I think the gravity is pulling in reverse. It's pulling Microsoft and Google up, and it's pulling Meta down because I don't think Wall Street really believes that they're going to be able to compete on artificial intelligence, even though it is an excellent company. In the first quarter, consumer spending was expected to increase by 3%, and it increased only 2.5%. So that indicates again that the economy is slowing down, but yet inflation went up in the first quarter. You have this discrepancy between inflation going up and the economy going down, which is bad news. But artificial intelligence is here to save the day. And Meta, it went down 10% the next day after it reported earnings because they did not like the guidance. They did not like the spending on artificial intelligence. But Friday, Google and Microsoft saved the day as they came in with excellent earnings. Google, otherwise known as Alphabet, symbol Googl, went up 14% after they reported earnings on Friday. And they beat on both revenue and earnings, and their revenue was up 15% from a year earlier. Everything about this report was good, and they are a giant in artificial intelligence with their Gemini projects and a deep mind. And, their Google search, in my mind, was kind of the first artificial intelligence thing kind of going anyway. And their search revenue and YouTube revenue, I think, was all excellent. It's all good news from Google, and I think there's more to come from here, and I couldn't resist buying it. Google did so well that they announced their first dividend, and they're going to buy back $70 billion of their own shares, which increases the value for shareholders. Looking at the 1-month chart on Google, you can see that it's spiked up on its earnings, and it's well above its 50-day moving average. Its relative strength is 74. And I think this stock has been laying quiet for a while, and it's starting to move. And I think we've got a lot more to come from Google. Google's price to earnings is 25, which is excellent for a major technology company. And its earnings growth rate is 18%, which I think is going to improve. So I'm satisfied with that. The other giant in artificial intelligence is Microsoft. And I think a big reason they are so profitable and why they have surpassed many other companies, including Apple, is because they bought 49% of OpenAI, which is probably going to be the first company to develop artificial general intelligence. They are spending all kinds of money on artificial intelligence. And this is the news from Google and from Microsoft is just excellent for Nvda. Microsoft increased its capital expenditures by 79%. What do you think they're spending so much money on? They're buying expensive Nvidia chips, and Microsoft is finding it to be worthwhile. And they indicated during the call that they're going to continue spending big money on capital expenditures, which is Nvidia's chips, most likely. I did not buy Microsoft because its price has come down in the last month, and it's actually below its 50-day moving average. Its relative strength is only 44. It has a relatively high price to earnings of about 35. And its earnings growth rate is 17%, which is okay. But I would want to see that higher with that high price to earnings. I think it's a good long-term play, and I think it will continue to grow and will be a good buy in the future. But that's one for the future for right now. Here in the news on these major technology companies, it's like all roads lead to Nvidia and artificial intelligence. And so how can I avoid buying the best chip maker? And so I bought plenty of Nvidia. And looking at the 1 month chart, you can see that the news on Google and Microsoft bounced it above its 50-day moving average, and its relative strength is about 54. And so it's price to earnings is around 40, which is high, but it has an earnings growth rate of 52%, which I think is most important in this situation where literally the whole market is depending on Nvidia. I almost day trade super microcomputer SMCI just because it's been so good to me. And it's recently had a big coming down, but with the good news on Google and Microsoft, and SMCI will follow Nvidia to a degree. So I sort of almost day trade it. I try to hold it as much as I can, but it is such a wild stock that I got to be very cautious with it. You can see that it went below its 50-day moving average, although it did go up with Nvidia and the good news on Microsoft and Google. Its relative strength is 47, and it is below its 50-day moving average. So I'm going to be cautious with this one, but I'm a very active trader, especially on this stock. I also bought Vertiv Holdings, symbol VRT, which sells cooling equipment for data centers. They're very important for artificial intelligence. They have increased their orders by 60%, and their profit margin is like 42%. So they're a very good stock to own, in my opinion. Looking at the 1 month chart on Vertiv Holdings, you can see that it shot up on that Friday after Google and Microsoft reported their earnings. It went from the 70s during the month to about $93. It has a high price to earnings of about 41, and its earnings growth rate is an excellent 38%. So this is a stock that's recommended by many people. I think it's on solid ground. And as long as artificial intelligence is storming forward, I think it's going to do very well. All of these stocks bear some watching, and I'm an active trader, and I will trade them if need be. I think they're a decent bet for right now. Amazon has significant involvement in the web, of course, with their Amazon Web Services, and they will be using artificial intelligence. We have these two giants that just reported. Amazon reports next week. I bought Googl. I bought a good amount of Googl, and I bought a good amount of Amazon. I want to buy Amazon before they report earnings because I think it's going to be a similar story to Google in some ways. So let's use our real human intelligence to benefit from artificial intelligence, which I think can be quite beneficial to mankind and to our investment portfolios if handled correctly. Thank you.